Don't believe the hype. Never believe the hype. Guys, this video is all about, pretty much people in financial markets touting some big new fancy thing and essentially doing possibly the opposite for a variety of reasons. And it usually makes people upset and it catches them off guard. But I have been banging the drum of DIY for a while and how people should just rely on themselves, do their own research, and don't just rely on people they watch on YouTube, like this channel. Like, just don't rely on everything I say. Do your own due diligence. And the main reason why is because these guys do their own due diligence. So they may say something and then they may do an opposite action, and then it may catch you off guard. Like, well, I thought you said to do this. Well, they may have a specific plan in place, and their plan isn't HODL and diamond hands. That's not their plan. They have other plans, and their financial instruments are tools for those plans. One of these people is Chamath Palihapitiya. Now, I'm actually a fan of Chamath for a variety of reasons. But this past year, I've been pretty upset by some of the things that he's been doing. But namely the SPAC thing, and just kind of coming off as like a little bit of a FinTok. You guys have seen those financial TikTok people, but like almost coming off as like one of those FinTok gurus of like, yeah, SPACs are going to be the greatest thing ever, and you should invest in it, throw all your money into it, and I'm going to sell, like that. Basically, that mentality is just something I'm just not a big fan of. So you guys might have seen Chamath. This is Chamath. And he says, I sold Tesla in the last year or so. This was recent. He said this on September 29th, 2021. You know what he also said in 2021? Don't sell a share. Billionaire investor Chamath Palihapitiya says Tesla stock could triple from current levels, making Elon Musk the first trillionaire. And that was back on January 7th of this year. So January 7th, he says this, but in September 29th, he says that he sold, and he said that he sold in the last year or so. So was this after he told people not to sell a share or not? I don't know. But you guys know, every single time I get on one of these videos and I talk specifically about gold and silver, I say, this is just what I am doing. I am buying this at a particular time. You should do whatever you want to do and what makes sense for you. I think it's important to say that because these people neglect to say this all the time, though they act on it all the time. They will say, hey, don't sell a share of Tesla. And then they're like, oh, well, I have an idea, an investment idea, and I need to raise the cash somehow. So I got to sell some Tesla. They should probably also say, you know what, I'm going to sell some Tesla, in a few months from now to probably raise some cash for an idea. You guys should do whatever makes sense for you in your own life. And he could say, hey, I really like the company. I really like Elon Musk. But as far as the stock is concerned, there's a lot of the stock has a pretty nice price here. I need to sell so I can realize some cash and then put it elsewhere. You can just say that, and I'm pretty sure people will, I'm pretty sure you'll be fine. But unfortunately, he's been getting a lot of flack recently because people are basically saying that he's, a hypocrite. Cathie Wood is also another person that people may not be saying is as much of a hypocrite, but people are kind of worried that she dumped some of her Tesla stock recently. Check this out. Cathie Wood, ARK Investment Management, continued its selling spree of Tesla stock after the investment management firm offloaded $270 million worth of the electric vehicle maker's shares Tuesday. Three of Wood's exchange-traded funds, ARK Innovation, ARK Tech and Robotics, ARK Next Generation Internet, all these fancy names. Cumulatively sold more than 340,000 Tesla shares Tuesday, according to its daily trading update. All three funds, as of September 28th market close, still have Elon Musk's electric vehicle company as their top holdings at more than 10% each. Wood, during Monday's close, also trimmed her Tesla stake. Her ARK-W and ARK-Q fund sold over 42,000 shares combined. The Star stock picker has made it a habit to sell Tesla stock when the electric car maker has either outperformed in a certain duration or has grown too much to her liking in her portfolio. A surge in yields has battered high growth technology names. A rise in global bond yields makes the return on stocks look less attractive. So this is very interesting because when you think about it, this is a sea change. And it's a sea change for many of us, specifically in the gold and silver space. When someone makes this kind of move and they're basically saying inflation is going to be an issue, we need to get rid of a little bit more of this company. Maybe we'll take on a little bit more of other companies. Well, I don't know. Like, she basically has put herself into a corner because she has a lot of tech names, a lot of these high growth tech names. So I don't know. But she's basically saying yields are rising and they will continue to rise. And as you guys know, being gold and silver guys and gals, you know that when yields rise at this part of the business cycle, that's a good thing for gold and silver prices as we're starting to price in inflation. So that's also a bad thing when it comes to these high growth tech names. So taking that into consideration, that's probably one of the reasons why Cathie Wood sold so much Tesla recently. So again, especially many of you who might be watching from Wall Street Bets forums or something else like that, these people are going to do whatever is in their best interest. I would not get too upset by them because of that. I would only get upset when they say one thing and tell you or make a claim that sounds like they're telling you to do something else. So when it comes to the Cathie Woods or the Chamaths of the world, I say let them give you an idea, but then make sure that you check it out on your own. Now that brings me to the end of this video, where I'm going to talk about the reminiscences of a stock operator, which honestly, even though none of you guys are into stocks, I would say this book should be given to everyone in an Econ 101 class, if it isn't already. But basically, it is a historical breakdown of basically why nothing has changed since the early 1900s when it comes to the financial markets and retail traders. Basically, there are these things called bucket shops, and I've read this book. I have a copy of this book. I actually have this copy. There are these things called bucket shops, and basically people would go in there and bet on a stock going up, and they would read the tickers. And some people got so good that they were like, I can anticipate what's going to happen next. Does that sound familiar? It probably does. It probably sounds like a day trader looking at technical analysis charts and nothing else and saying, oh, the 1 minute chart looks like this, the 5 minute chart looks like this. Oh, it's time for me to make a move. That's exactly what was going on back in those times. And yes, most people lost their shirts even back then. And the type of people who are prevalent back then? Well, many people who actually had their own brokerage firms also gave stock tips. And they would say, hey, you guys should buy this stock. And lo and behold, they would take the other side of the trade and unload some stock that they didn't want to have any more of. So there's a lot of kind of just slimy stuff happening back then. And you see it play out again, even in modern times. You have people like, hey, SPACs are going to be the new greatest thing. Throw your money into SPACs. And then they're like, I'm going to sell some SPACs now. which is essentially just like what happened here, where they'll would have people who would give stock tips and say, "Hey, put some money into this stock," and then they're like, "All right, they're actually buying that stock. It's time for me to unload all of my stock now because they're buying it." That's essentially what happened. And you know what people would use to buy a lot of stock at a time, even if they didn't have a lot of money? They would use margin. Yes, margin was a thing even back then. Just like how margin is a thing right now, that same thing that is propping up crypto markets. So I'll leave it there. You guys definitely check out Reminiscences of a Stock Operator if you guys get the chance. Definitely a good read. Thanks again for watching.